Hello and welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, not having a key tax deferral strategy when exiting highly appreciated assets such as cryptocurrency, business, real estate, and deferring millions of dollars of tax. Is one of the toughest positions to be in. And so that's why we really focus on the Deferred Sales Trust to help you create and preserve more wealth, or help your clients or business partners do the same. For those who don't know me, my name is Brett Swartz, and I'm the founder of Capital Gains Tax Solutions. And we typically have guests on this show where we are interviewing them and trying to glean some wisdom on commercial real estate investing, financial advising, cryptocurrency, of course, tax deferral, and all things creating and preserving more wealth. But today it's just me, and we're talking about the Intelligent Investors Real Estate Conference 2022 that I just had the privilege of speaking at and being a guest at for the first time in one of the most beautiful areas in all of California, Manhattan Beach. And so I'm going to go over some key takeaways, and I'm going to go over a few things that I hope that I can share some wisdom with you guys today. And so for those who are interested in attending, I would strongly encourage you to attend. I think it was for next year. I think it was one of, if not the best networking, intimate, connecting with folks that are on a very, very high level when it comes to commercial real estate investing, lending, raising capital, economics, all things creating and preserving more wealth in commercial real estate, value add multifamily, in ways, of course, to also defer tax, which is cool because I had a chance to speak there. So here we go. So a couple key takeaways. And by the way, if you stay around for the very end, also I did a poll, and I had some people talk about what the biggest frustration with the 1031 exchanges, and I'm going to share those results at the end of this video. But let's talk about key takeaway number one, which is this: using inflation to your advantage. Use inflation to your advantage. So right now we're seeing all-time lows, although interest rates have gone up a little bit here in the past 6 months, but all-time lows in interest rates and the ability to leverage debt in your favor when buying assets. And the idea is to lock in long-term debt over, obviously a 5, 10, 15, sometimes even 30-year period of time, and allow inflation to pay your debt. And let's think about that, right? Inflation, we're seeing, by the way, somewhere around 6 to 8, sometimes 10%. Some of these stats that are shared on the general news aren't necessarily the true inflation, which we've heard is it could be even twice that. So 13, 14, 15% if you look at different sites. And so they had a couple really smart people talking about this and sharing that at a certain time period, they adjusted how they reported inflation. And when they did that, it's almost like going from the gold standard over to not a gold standard, and how that changed the monetary policy and things that happened in the past. I'm no expert in all of this, but basically what they said is the same thing or similar thing with how inflation is reported, that there was a switch. And when this switch happened years ago, it makes it seem like inflation is not going as fast as it is. And in fact, sometimes they'll change something like, well, we used to measure inflation by like hamburgers, right? There was a thing called like the McDonald's theory of inflation, and figuring out how they're raising their prices was a good way to measure it. And then they switch it because it doesn't look great to something like steak, and they switch these things. And unfortunately, it doesn't necessarily give us clarity and transparency on what's really happening with inflation. And so a lot of what I took away from that talk was, if you can lock in long-term debt, let's let true inflation, which again, it can be in double digits, pay the dollars, right? You're going to be paying the debt back in dollars that are inflated, and therefore it's more beneficial for us as investors, right? And so how we do that is by locking in fixed rate financing for as long as we can, as well as being aware of, though, if you do want to exit, the ability to make sure that you're buying down your prepay, right? Because there are situations where I heard this multiple times, where multifamily owners like ourselves and investors like yourself were fixing in debt, and they were not considering that the 5, 4, 3, 2, 1 pay down or the yield maintenance is it could be detrimental to when we want to exit the property. And if just up front while you're negotiating with the lender, say, hey, look, I'm willing to take some extra basis points right now or buy down the rate right now in lieu of no prepay or a reduced prepay. And so it's balancing letting inflation pay off your debt, keeping it long term, and also be giving yourself a potential exit plan should you need to exit, or should you want a 1031 exchange, or should you want to do a deferred sales trust on the exit. And so just realizing that now more than ever, making debt your friend is very, very important. So that's the key takeaway on that piece. The next one had to do with the Great Migration. And I'm in California. We're seeing amazing amount of people going to Texas, going to Tennessee, going to Florida, going to Nevada, as well as businesses. And we talked about how to use that to your advantage. Okay, so we're going to ask ourselves these questions, like, where will money be in 10 years, right? Where will businesses be in 10 years? I mean, one of the key cool kind of crazy stats or facts that happened in 2021 was there were 3 Tesla, Oracle, and HP all moved out of California to Austin, Texas, right? These are huge companies, long track records, and they're moving their headquarters to Austin, Texas. And so it's just following that migration. Where would the money be in 10 years? And how can we use that to our advantage? Well, part of that is purchasing properties in those states, right? That are business friendly, that are landlord friendly, that are going to see continual growing of rents, that are going to have less barriers to entry when it comes to businesses wanting to grow and create communities that help people to thrive, right? And so multifamily continues to be the hottest product type and does not appear to be stopping in 2022 as a part of this for those key states, right? For other states, it can be more of a challenge. However, we want to be very careful as well on this point as well, that rent control coming to a city or state near you. So typically rent control, I think generally speaking, for multifamily investors, we think it's reserved for larger states or like states like New York or California in that sense, where you have a more regulation. California had statewide rent control here recently in the last year. I'm here in Sacramento, where I'm a multifamily broker as well. Now, keep in mind, when we have rent control, it's still pretty substantial, the amount of rents you can raise for most of these policies, right? So we're around like 5% plus CPI, which could be as much as a couple points, right? So that could be as much as 8% on a year over year. So, but just be aware of that. Like, just because you're buying in certain states that are very favorable, that the trend is going to rent control, which is not great. So that's kind of the other thing. So great migration, use that to your advantage. Buy in states and ask yourself, where will money and businesses be in 10 years? All right. So the next one is the great wealth transfer. So I had the privilege to speak on the multi-generational playbook, which was addressing how we, as those who create wealth or help others create wealth, how we can help with the wealth transfer for ourselves and for our families and for those we're called to serve. And in fact, one of the stats, which is pretty wild, and I didn't realize it was even this much now. I used to think it was like 17 to 20 trillion, or just over the last number of years, it's up to 32 trillion that the baby boomers, my parents, right, passing to the millennials in the next 20 years, $32 trillion, the biggest wealth transfer in the history of the planet that we know of. And the importance of setting up proper estate planning, not just for capital gains tax, right? Which has right now, if you own real estate, you can get like a stepped up basis and your kids can inherit it and walk away capital gains tax free. But we also want to work on understanding estate tax, right? How much of this is inside the taxable estate and how to exit now while our parents or those who we're serving, right? So that the next generation is going to hit with a 40% death tax. And I have a full video. If you go to YouTube, look up on the Deferred Sales Trust, you can learn more about this. And it's pretty remarkable how you can exit out of positions, cryptocurrency, businesses, real estate, stock, all tax deferred, as well as have a chance and move all the funds outside the taxable estate, which eliminates the estate tax without giving it away to charity and without having to buy life insurance or do a bunch of gifting, which are the typical ways that folks are are doing with the state taxes. So this great wealth transfer is bigger than ever, right? We're seeing all-time highs in the stock market, cryptocurrency, real estate, generally speaking. Although this last week, as I'm recording this, 1/25/2022, we're seeing some big hits in cryptocurrency, and the stock market's a little bit down here. So these are things to be considering, as well as making sure that you have your living trust properly set up, and that it's updated if you've already had one. And so those are some things. Okay, the next one has to do with the housing crisis. And so what was cool is they brought in some folks that actually are in the city or working with the government very closely, as well as private developers, and they had them on a panel, and they were just discussing how tough this thing is. If I think like on a Rubik's cube, and you're trying to solve this housing crisis problem, there's just so many problems. There's so many colors on all the different sides, all mixed up. And one of the stats that was just staggering for me was that there was a city in Los Angeles that tried to build or did build an affordable housing project, and it ended up costing $700,000 a unit. And I heard that, and it was staggering to think about $700,000 a unit to try to build affordable housing. It just doesn't pencil in any way, shape, or form, right? For people to make sense of it as a developer, or even as a city or as a taxpayer, and how much of a problem this is with regulation, with red tape, and with just the cost of land and development and materials and all of these things that are basically making what was already a housing crisis even worse, right? And so we're undersupplied by millions of units, and the spread between what we need in supply and the increasing demand is out of balance. And so this spread continues to grow, and also how much we can actually produce in a given year. And this is also a nationwide problem. It's not just a state of California type of problem, right? Which is not encouraging. And so they talked about figuring out ways to solve this with manufactured housing, or 3D housing, or different technologies to try to speed up the process. Interesting, that came out a couple of years ago, kind of got hot, I think, and a lot of people talked about like tiny houses and different things. But the challenge was, they said on scale, they as experts in this field of affordable housing and ways to try to innovate, say that it's still not there. I mean, the technology's there, but the cost and the time to do everything, it's still not as efficient as we need it to be. Now, the hope is within 3 to 10 years that we can decrease the cost and decrease the time in which it takes to get these units available and in place, but it's still not there. And so that's the housing crisis continues. And so that's to be determined, and who's going to solve that, I think, is a big thing for America and everybody else. I know here in California, for folks that want to be in housing, right, that are starting to form families and yet feel like they've missed it because values are so high and wage growth is not keeping up with the values of real estate. Okay. So that leads into the next takeaway, which is regulatory changes. The good news is that 1031 exchange is still here, and it appears to be off the table for those who are talking about taking it away. As well, we had the question, was the Deferred Sales Trust being threatened? No, it's a separate tax code, IRC 453 versus IRC 1031. So the Deferred Sales Trust is still here and wasn't really being threatened, right? It wasn't at all, actually. However, the IRA is being threatened, right? And the IRA and the ability for those to take their IRA from traditional investing in like the stock market and put it into different investments, passive real estate deals, and that is being threatened, as well as capping the amount on what you can put in the IRA. And so for those who have IRAs, and for those who want freedom with being able to invest funds in IRAs, it's important to kind of be aware of that, and take action by calling those who are in office to talk about the importance of the freedom of investing in different things besides just the stock market. Okay, so that's the regulatory changes. Thought that was interesting. The next one is sourcing multifamily deal flow in a competitive environment. So like I was saying before, the real estate market appears to be the highest we've ever had in the history of commercial real estate, especially multifamily, and how competitive it is to try to even find deals. And so what are some things that we can actually do in this environment if we want to find deals? Well, One thing that I took away from Reed Goosens, which I thought was a great point, and Reed, for those who don't know, he's a multifamily syndicator, an operator, and mostly owns in Austin, Texas. He's actually lives in Los Angeles, but he talks about underwriting every deal you see. No matter what, even if you're not in the agreeing with the price and the value of the properties that you're seeing these marketing packages come out at such low cap rates. And the reason is, he says, this keeps you in the game when the deal comes. It helps you to see the needle in the haystack because you've seen so many others. But also, as you're having these discussions with these brokers, as you're underwriting, as you're doing your due diligence, it shows your commitment to finding, sourcing, and then once you get into contract, closing the deal, right? Because you're doing the work up front. And so that was really just an encouragement for all of us, right? To make sure that we're closely following, underwriting, kicking the tires of every potential deal that we can in order to find that needle in the haystack, but also to communicate to the brokers and or the sellers that you're being thoughtful and you're taking your time to do this, right? Which leads into the next point, which is just the importance of broker relationships, right? To find on-market deals or to be able to, compete and win those on-market, or to find off-market deals. And having those relationships with those brokers in the places that you're wanting to buy is vitally important. So those are the key takeaways. And I want to encourage everybody who's listening to go to Intelligent Investors Real Estate Conference 2022 or 2023 on the next year, and meet and network and learn from some amazing folks. Hunter Thompson he's with I think it's Asym Capital. And they are amazing hosts. They bring in the best of the best, and I think they really addressed the most pressing things. And there's lots more takeaways that I don't have time to share today, or my brain just can't handle all because it was a lot. But I would encourage you to go to that conference. Again, this Intelligent Investors Real Estate Conference 2023. I think it's happening about a year from now. They haven't set the dates for sure, but look for it probably late January, early February, somewhere in the Manhattan Beach area is where I'm going to guess is going to be. For those who want to learn about the Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. And that, by the way, it works for cryptocurrency, businesses, real estate. And also, if you want to get a consultation with myself to figure out how to do generational wealth planning and how the Deferred Sales Trust is the future, the Netflix way of transferring your assets and your wealth to the next generation without giving it all away to charity, without having to buy a bunch of life insurance, I'm happy to discuss that with you. You can go to capitalgainstaxsolutions.com. Hey, please rate, review, subscribe. Please share this with somebody it can encourage, as well as consider joining our mastermind, which happens every single Friday. It's a Deferred Sales Trust Mastermind at 10 a.m. Pacific Standard Time, 1 p.m. Eastern. You can also go to capitalgainstaxsolutions.com to register. Totally free. And we have myself